You better get some cash saved up. I'm telling you, we are going through deja vu with banks cutting credit access. This is not good. This is not good. I remember this like it was yesterday, which was the premise of my first book, Strategic Money Planning, where I said how the credit cards cut access and raise interest rates on me, even though I was completely current with their debt. Capital One is announcing cutbacks on lines of credit. You think this is the only bank that's going to do it? Let's read this. So as I came across this article from Advisor Perspectives that talks about JP Morgan wants to be in your post-COVID-19 wallet, which I was like, I can't stand JP Morgan, but I was like, all right, whatever. Long story short, what they're trying to do is they're saying, hey, look, we want to engage in wealthier customers and give them access to credit, so hopefully they'll do investment banking with us. All right. It shouldn't be lost on anyone that this rollout comes just days after Capital One confirmed is cutting the borrowing limits on credit cards of some of its consumers. As someone reported yesterday, the third largest U.S. credit lender is watched closely as a harbinger of what's to come at other major banks. The move seemed to signal what the largest financial institutions had feared. The failure to extend existing federal aid could leave the banks on the hooks for billions in bad loans. So let's read this, and here's Capital One here from CBS. Capital One cuts credits. Remember, when Pablo makes a noise, you got to paw the like button. Pablo, hold on just a second. You just chill, buddy. Capital One, come here, stop. One cuts credit limits as millions struggle with income cliff. They're cutting their credit limits on credit cards, with some consumers reporting on social media that the credit limits have been cut in half by the card issuer. The company said it's making the decision based on the customer's account activity in the last year. Capital One, the third largest credit issuer, is trimming consumers' credit lines just week after the $600 a week in weekly unemployment benefits expired. All right, so that's freaking scary, man. Credit card issuers are tightening the reins because they're fearful that more households could face financial difficulties in the months ahead. Basically, if you haven't been using a card up to this point, banks sure don't want you to start using it now because it might be a sign of financial trouble, says this guy. For card issuers, it's 1,000% about managing risks. But the move isn't going over with Capital One customers, with many voicing complaints on social media. Longtime customer, both savings checking and credit card, many years used my card for international travel, decided to reduce my line of credit by one half. Almost 1/3 of U.S. credit card users had their accounts closed or their credit limits reduced involuntarily since mid-May. In a statement on Friday, they said the company kept credit limits significantly above the customer's highest balance of the last year to make sure people could continue to use the card despite credit limits. All right, so I'm telling you, man, if you think Capital One's the only bank that's going to do this. So let me just tell you what happened with me. Let me close my door. All right, don't be barking there, Barky. All right, so in 2007, we still here? Okay, in 2007, I had everything with Capital. Was it Capital? No, it was Chase. I think it was Chase. 0% forever credit card. I did a balance transfer, 0% forever credit card. All right, and back then, USAA and other banks were offering basically home equity lines of credit, almost sight unseen at 100% loan to value, sometimes even 105% loan to value. It was nuts. Anyway, so I had I was funding my Roth IRA through a 0% interest only, 0% on interest credit card. I think I had like $15,000, $20,000 on that. I said, well, if I get free money and I could use that to fund my Roth for my wife and me, hells yeah. All right, so then then times got tight. We moved to Texas, as I've said many times, and I talk about in this book, and I talk about it in this book where my chapter was Debt is the Enemy. Debt is the Enemy, exactly, first chapter. Anyway, so we get down to Texas. My credit's fine. We never were missed. We never were late, nothing like that. I've always had good credit. And all of a sudden, out of nowhere, I see that I get charged like $500 in interest on a Capital One, or not Capital One, a Chase credit card. I was like, what? I said, it's got to be a mistake because I'm supposed to be 0% for the life of the loan. So I call them up, And the lady was just like, it basically took forever to get through. And the lady's like, yeah, we reserve the right in the fine print to raise the interest rates to our consumers if they have, if we're worried about credit problems. Like, well, I've never been late. I never missed a payment. My credit rating, my credit report is high. What do you mean? She goes, well, because you have basically hit your limit. I said, well, I hit the limit because that's all I asked for. We're going to raise the interest rate. So basically went to 14.99. What? 14.99. I said, this is nuts. And she goes, yeah, well, you can always transfer it out. I said, well, anyway, so I started looking around. There's no more 0% line of credit offers, nothing like that. I was like, this is crazy, crazy. And I mean, I was scared, man, because we were hurting for certain back then financially. And, got 4 kids, 2 brand spanking new bouncing baby boys. And I was like, we just moved to Texas. It was scary. Lines of credits. And I talked to customers. I'll never forget this lady in Nevada. Her line of credit was pulled from USA. I'll never forget this. This is when I first started working, probably one of my first clients. Nice lady. And she worked as a cocktail waitress in Las Vegas. And she goes, USA just pulled my line of credit. I said, huh? And I looked into it and I said, yeah. And they said, USA reserves the right to reduce your lines of credit. And I was like, she was like, I was relying on that. That's what because she was also she was building a rental real estate empire. The whole thing was nuts, man. It was scary stuff right there. And the lesson was if you're relying on credit and you did not have cash, not only in my experience, did they raise the interest rate from 0 to 14.99, which killed my cash flow, killed it. And that's whether I actually ended up borrowing against my 401k a year later in which to pay that off because I said this is nuts. But for that first 12 months, it was tough, dudes. It was tough. On top of that, then with this lady right here, and I can't remember whatever happened to her. I think she had to sell some properties, and she took a pretty big loss. I can't remember if memory serves, but I just remember she was a very nice lady. But there's nothing we could do. They said, we reserve the right to reduce your line of credit if loan to value exceeds a certain threshold. And loan to value is how much you have outstanding on a debt versus the current market value of your home. So if you buy a house for $100,000 and you owe $50,000 on it, that's an LTV of 50%. But what if you buy a house that's worth $100,000 and you owe $50,000 on it, and then the loan and then the fair market value falls 50% to $50,000? Now your LTV is 100%. And apparently in the fine print, USA and many other banks says we reserve the right to reduce your line of credit if the loan to value falls below a certain threshold. I mean, so many people are stuck, man. It was just ugly. And if this same thing happens now, Pablo, stop. You better be prepared because if the Capital One is not a small potato, not a little credit union. They're a big player in this industry. And if they're going this route, I'm telling you, so be careful. Get your freaking stuff in order. I will see you.